Yo, what is good, YouTube? We are back with another video. If you're not in the free Discord, go join it. It is linked down below. 1K members soon. So we're going to be going over the standard deviation projections and how you can use these to spot reversals, retracements, find an entry, do whatever you want with them. They are good to use for price targets. So right here we have the 0.5 and negative 0.1, which can be used as an accumulation zone, or if we have a large expansion that is the manipulation leg, you can use the negative 1 and 0.5 as a price target. Now the negative 2 and 2.5 is a reversal or a retracement, but if the draw is higher or lower, it can just be another accumulation phase. And negative 4 is the max expansion. So right here is what they look like. Right here are the settings. So you can just copy these, do whatever you want, screenshot it, and we're going to be going over what this will look like. So right here we have a rough depiction of what this would look like. So right here we have our original consolidation and a manipulation. So right here we have a power of 3 happening. So this high created this low, which swiped out these sell stops. So this is our our manipulation. So this is where we are going to anchor our fib. Right here we anchor the fib. What do we see at negative 1 and negative 0.5? We would see our accumulation. So let's say we have a fair value gap here, which can be your entry, right? We are anticipating a reversal. What happens right here at negative 2, 2.5? Well, we see a retracement, right? So right here we come down, we actually swipe this low, and then we get displacement out of here. Right here could be your unicorn setup once we get displacement back inside the range. So you can anchor the fib once again. Now let's say this actually hit the negative 0.5, comes down, fills out this fair value gap, and then continues higher. Negative 2, 2.5 lines up with what? The negative 4. So let's say there's a higher time frame PD array, like an old high up here. So buy side liquidity. Now, once we have hit this negative 4, what can we anticipate fully? Well, we can anticipate premium or discount of the current range that we are in, or a full-on reversal. So it would be what? Buy side of the curve turning into sell side of the curve. So right here, once we hit that negative 4, we can anticipate a reversal or a retracement. But let's say on this day that we were bearish and we wanted to see shorts. So now we anticipate sell side of the curve. So right here, whenever we turtle soup this high and displace back inside this entire range, right here's your first phase, what? Negative 0.5. Come into a fair value gap, breaker block, order block, whatever it is, displace lower, and here can be your second entry. Now, negative 2, 2.5 lines up with what? Sell side liquidity, right here. What happens there? Slight retracement, fill out imbalances. Now this low took out this high, right? This low created this high, which took out this. So we can now anchor another fib right here. We then expand to the max expansion, negative 4. So we're going to go over 2 days, Thursday and Friday at 8:30 if I move my camera, because there is a ton of examples we can find in just these 2 days. 8:30 we had high impact news, final GDP and unemployment claims. So with high impact news, we manipulated. So we have accumulation, manipulation right here. So we can anchor this fib from this low to this high. Why this high? Because this is the last swing high we created before taking out sell side, right? We take out these lows, displace back inside the range. We come up to negative 4. Right here is negative 4. So let's go down to the 1 minute. What do we see right here? Right, we tap that negative 4 and then we displace back in, right? Changing the state of delivery, and right here we create an SMT. Now, this can be used as what? This can be used as your manipulation. So we can drag this fib from right here, right? But if we go to the 5 minute, what are we doing? And anticipating, if we're not anticipating a full-on reversal yet, premium or discount of this entire range. So we can mark out premium and discount. That's upside down, but it's fine. So premium and discount, what do we hit? Negative 1, and then we come back inside the range and create an imbalance. Now right here, we don't have a swing high, right? This is where you can use the failure swing, right? We don't create a new low. We have reach discount, right here, this red, and we have rebalanced price into a 5 minute inefficiency. So right here, you can use this failure swing because we never create a new low. right here you can anchor from here. Standard deviations. Where do we go? -2, 2.5, which lines up with what? Buy side liquidity. So right there, you can spot a reversal or retracement, right? But we have just turtle soup to high after reaching discount. If we're going to continue, we're going to take off through that high, displace through it on the higher time frame, the 5 or 15 minute. So that we have displaced back inside the range. Now we can anticipate a full on reversal, right? We have original consolidation down here. What's this look like? The original depiction of what I drew out. So what do we do here? Because we have no swing low. This would be your manipulation whenever we take out buy stops at this high. So what do? We anchor our fib. Where do we go? -2, -2.5. Right here. Right there. So that's literally all you can do. So let's play this out and see if we do reach the -4. I'm not sure if we do. Would you look at that? To the tick, we come right above -4. I actually had no idea if we did. Now let's go down to the lower time frame. -4. If we come into the facility, I don't know how to say that word. If we come right around -4, that's where you can spot the max expansion. What do? Well, this is a failure swing. Measure out. Boom. -2, 2.5. Do we get there? Oops. Play this out. Boom. -2, 2.5 reached. Retracement or reversal. Also, what can we do from here? Not failure swing. Measure this out. Sorry. Measure this out. Where do we go? -4. We come right above it. What do? Come straight back up. This would be your standard deviation on the lower time frame. Yep, see? Right here, you can measure this one out. -2's up here. Play this out. Lines up with buy side. Come into -2, 2.5. We retrace. Do we get to that buy side? Boom. Get to that buy side after actually coming down. Well, that was market on close. So right there, you guys saw how many examples I just made just from this. Right here, the first move, -4, retrace into a discount, 5-minute imbalance. Measure that failure swing, come into -2.5, sweep buy side. Measure this buy stop rate, come into -4. What do we do at -2? Accumulate, sweep out buy stops. Right here, you can use what? The lower time frame. Use that lower time frame because we just had a manipulation. Right here, boom. -2, 2.5 lines up with what? -4. It's right under it. Right there. So let's head on over to Friday. Get out of replay mode. Now, what do we do here? Right? We had high impact news at 8:30. This is an ugly candle. So with this, I would ignore this candle, measure this out. Why would I? Oh, wow. I didn't realize that. Why would I ignore this candle? Because it's high impact news and we raid buy side and sell side. So I would ignore this candle if I'm going to use these standard deviation projections. I would use the candle before and the last swing low or swing high. So this move right here, that's what I would use. Where do we go? -2. -2, 2.5. What do we see on the lower time frames? Oh, look at what we do right before it. Accumulate. Right here. Accumulate. Manipulate. Displace. Beautiful long. I completely missed the long. So, what do we do here? Measure this out. I'd use the higher time frame for this actually. 5-minute. 5-minute. Okay. I'd use that. We have high impact news at 10. What would we expect? A continuation. Why would we expect it? Wait, do we have? It looks like we had new. Yeah, consumer sentiment. Why would we expect that? Because we have reversed, right? Came into -2, 2.5, displaced back inside the range. This is not a retracement. I would expect continuation at 10 o'clock. So, what can we expect from here? Boom. Come almost, what did I say? If we come close to -4 and it looks like a reversal. So, right here, I actually took a short. And right here, what do we create? SMT. SMT here. So this leg up would be your manipulation. Measure this out. Boom. Come into -1. Accumulate. Right here, you can see that. Now you can go to the lower time frames. Measure this leg out. -2, 2.5 lines up with this one. What do we notice? Come back up a small retracement. Continue lower. Come close to -4. Accumulate. What can't we do from accumulation or consolidation? Reverse. So this is just another phase of accumulation. We wait for that manipulation and then we measure another standard deviation leg. Take out buy stops right here. This is the manipulation leg. Where do we go? -2, 2.5. Retrace. Then we turtle soup this low. Come close to -4. And then we come back up. Now what do we do here? Create a failure swing. Let's measure this out. Do we come to -2? Look at that. -2 to the tick. Do we take that high? No, this is probably an SMT. But we take out this high. I'm guessing that's an SMT. Measure this out. Boom. -4. Oh, that's close to market close. -4 gets ran a little bit, but you can see we come back up through, and boom. This is standard deviations are one of the best ways to predict where price is going to be going and where it's likely to reverse, or you can get into a position, right? What do we do right here? Accumulate inside of a fair value gap, inside of a mitigation block, continuation at 10 o'clock, right? Create that SMT. Measure this leg out. Boom. Continuation. Come up, you can measure this leg out, right? Because that's a lower time frame manipulation leg. Right, if we go down to the 15-second. Geez, actually, I don't know where it's at. Right here. Right? We take out this high. Measure that out. Boom. Continuation lower. You could even measure this one out. Boom. -2, 2.5. Come into a fair value gap. Right? Then you can measure this one out. -4 is hit. Come up, retrace, take out buy stops. I don't like this one. Right, we already hit these -4s. What do you notice with all these -4s? They're very close to each other, right? You can use this any time frame, right? Go to the 1 hour. Right here, accumulate. Let's see if this works out, because I don't know if it does. Wait, where's the last swing low? I wouldn't use that because that's too... right there. -2's hit, retrace, accumulate. Can't reverse from an accumulation. Continuation lower. Come close to -4. Swipe out these equal lows. What do we do here? Accumulate. Oh, look at that. -4's hit. No body closures above -4. Okay? So you can use this on virtually any time frame that you want, right? Daily time frame. -2's hit, retracement. -4 is hit, retracement. Okay, I think you guys have seen enough examples. Standard deviations are dope. Start using them. I'm out of here. Join the free Discord. Drop a like on the video. Peace.